I get 25% of the cash flow. So if it's cash flowing just shy of $800,000 a year, $195,000 a year cash flow to me. It just gave myself a raise of $200,000 a year and took $1 million off the table. So, and my partner made $1 million. His brother, who's also a partner, made another $1 million, gets that cash flow as well. And our equity investors get all their money off the table and have a chunk of that cash flow as well.
Welcome to the BiggerPockets Best Deal Ever show. I'm your lovable host, Ken Corsini, who with my wife, Anita, have flipped over 800 houses in Atlanta since 2005 and even have a show on HGTV. But this show isn't about us. It's about all the amazing real estate investors out there that are crushing it. It's about their stories, their best deals, how they sourced them, how they funded them, and what we can learn from their experiences. This is the Best Deal Ever show. Hey, this is Ken Corsini with the Best Deal Ever show. On today's episode, I'm joined by my buddy, Tim Bratz. Tim, how you doing, man?
Dude, excited to be here, Ken. Appreciate you having me, buddy.
Yeah, man. Thrilled to have you. So, Tim, if you're an investor and you're on social media, you probably know who Tim is because he's lighting everybody up with his amazing multifamily business. Tim, tell a little bit about what you guys do.
Yeah, I mean, we focus on apartments. I come from the residential realm. I got started back about 15 years ago as, an intern in real estate and working in the construction industry. Started investing about 11 years ago and tried everything. Man, I was a real estate agent. Then I got into wholesaling. Then I got into flipping. Then I got into turnkey. And then I got into, buying small multi and then bigger multifamily. And, sat back on a vacation a few years back and just realized that 90% of my net worth came from my apartments, and it was only about 10% of my time. And I just thought, man, what if I just pivoted my team and focused only on multifamily? And that's what I've done over the past several years. And it's amazing, man, what you focus on expands. And so over the past 4.5 years, we've built our portfolio to 3,700 units. I got another 600 under contract right now, and rocking and rolling. So it's pretty cool. But again, I come from the residential realm. I never read a book on this stuff. I never went to a course, and just kind of figured it out. And I use residential methods in buying apartment buildings, and it's worked out pretty well.
That's amazing. So just in the last 4 years, you've accumulated 3,700 units.
That's when I built my current portfolio, right? Like I got started in real estate and I was really bad at real estate for about 7 years, going through all the learning curves. And then finally something clicked, and I started to, like all those times you mess up, you learn from all those things and you don't make that mistake again and then again and then again. And you keep on failing forward until all of a sudden you've made every mistake, and now nobody can pull the wool over your eyes. And so that's what happened to me. And, we do all the due diligence on all these things. And so we know exactly what we're getting into from the get-go. Before we ever buy this thing, we know what it's going to be worth. We know what work's going to have to go into it. And it's very predictable for us.
Right.
And so, and we look at a lot of deals in order to sort through to find and cherry pick the best ones.
Sure. Now you're in the Cleveland market, right? Is that where you're based out of?
Yeah, I'm coming from Cleveland right now. I split my time between Cleveland, Ohio, and Charleston, South Carolina.
Gotcha. But you're doing deals where? All over the U.S.?
Mostly in the Southeast and the Midwest. I got a little bit of stuff out in like Texas, Oklahoma, but primarily Ohio, Illinois, Indiana. I got a lot of stuff in the Southeast, North Carolina, South Carolina, Georgia, Florida, Alabama, Louisiana. I like those markets a lot.
Yeah. You're all over the place, man. So having done all these deals, obviously you had a lot of residential experience. Now you've got a lot of multifamily experience. Is there one deal in particular that stands out as your best deal ever?
Well, it's fortunate. It'll come full circle. I want to share kind of my philosophy on finding deals and the best deals. And it's a lot of times a sorting game. We look at 400 deals a month, apartment buildings.
Holy cow.
And they can range, and some of them don't meet our buying criteria because they're too small, or they're not in the class of area that we buy in, or where it's located, it's too much of a tenant-friendly area versus a landlord-friendly area. And so there's just different things of reasons why we say no to a lot of deals. But we look at 400, we close 1 or 2 per month. But it's a sorting game. And if you can sort quickly through deals, you can get to those deals faster than a lot of other people can before all the competition comes in, right? But at the same time, man, there are, it's like 2.5 million multifamily properties in the country. 2.5 million, right? If you talk about 5 units and bigger, it's something like, I think it's 700,000. And if you're talking 50 units and bigger, it's right around 90,000 units, 94,000 units. And that's just 2017 numbers. So that doesn't include anything that's been built over the past 2.5 years that before those statistics came out. So I can tell you firsthand that just one deal, and I'll go over one deal, a 60-unit deal, that one deal can change your life forever.
Sure.
But you got to sort through a lot of deals in order to find that good one, because as much as one deal and a handful of deals can build your net worth and build your income and build your residual and build your legacy and your wealth, one bad deal can take you down too. So you got to really know what you're looking at, or be working with somebody who really knows what they're doing.
Yeah. So I'm just curious how you're sourcing 400 deals a month to look at. Where are those coming from? That's amazing.
All the same ways that we source deals on the single family side. So, dude, I'm a multifamily owner, but guess what? I have a phone number just like residential owners do. So you can dial for dollars. I have a mailing address just like residential owners do. You can send out direct mail and postcards. You can drive for dollars, just like there's houses with tall grass and boarded up windows. Guess what? There's buildings with tall grass and boarded up windows. And the primary way that I've kind of built up my marketing machine is like, I network like crazy. I'm pretty active on social media, and I'm telling people all the time that I'm buying apartment buildings. A lot of people want to get into something, but they want to be like a secret agent and not tell anybody. And the issue is you're not just going to have deals fall in your lap if nobody knows what you do. So you have to be out there letting people know that you're buying houses, you're buying apartments, you're buying whatever you're buying, and stay top of mind. And what I found is that there's a lot of residential people that were in my database, in my email list, on my Excel spreadsheet, that were investors and wholesalers and bird dogs and flippers that come across apartment buildings a lot, but they don't know what to do with them. They don't know how to operate them. They don't know how to underwrite them. They don't know how to finance them or raise the money for them. And so what they do is they just shrug their shoulders and they just discard it. They throw those away. And what I've been able to do is just tell everybody that I buy apartment buildings. Send me all your apartment buildings. If you do, then I'll either pay you a wholesale fee, like a referral fee, or I'll kick you some equity in the project. And so that way you can build some wealth in perpetuity as well and be kind of part of the project. And by doing that and creating value for other people, it's then created a lot of value for me, where now we get a steady stream of deal flow, right?
Yeah,
and so
yeah.
I hired an acquisition guy, and he sorts through deals all day, every day, and then looks for the best ones.
Wow. Well, yeah, you basically created an army of bird dogs for yourself that are out there sourcing deals for you.
Yep.
So
exactly.
This best deal, how did this one come about? How'd you find this one?
Especially when there's like multifamily's a heavy and hot topic right now, and there's a lot of people trying to get into it. And what you need to realize is it's very different than commercial real estate. A lot of times commercial real estate, those brokers, they don't have to put the listing on the MLS or on LoopNet or on CoStar and market it out to the masses. And because they don't have to, because there's not the same laws and rules and regulations like there is in residential, like a residential agent has to put that listing on the market in 72 hours in most states, to protect people who aren't sophisticated landowners.
Mm-hmm.
Some kid inherits a property because their grandparents passed away. They don't know what to do with that property. And so there needs to be laws to protect those people. But if you're playing the commercial, you're assumed to be a sophisticated investor, and because you're buying specifically for investment purposes. So you're a big boy, you're a big girl, like you can vie for yourself. And so there's not all this regulation. So what you need to understand is, because there's not regulation, these brokers in commercial don't want to co-broke, right? What they want to do is they want to keep both sides of the commission for themselves.
Right.
So they leave a listing in their pocket and they shop it around to the top 10 buyers in town. They know who the top 10 biggest buyers are. And then if all those top 10 buyers say no to it, then it gets put onto the MLS, then it gets put onto LoopNet, and they're hoping that some putz comes in and buys it and overpays for it, right? So what you need to understand when you're looking for apartment building deals is you got to go off market. You got to go direct to seller, at least initially, until you become one of those big buyers. And I am one of the top 5 buyers probably in South Carolina and Georgia for multifamily. And so now I get broker relationships, right? Now I do get those off market calls, but I didn't always. 3-4 years ago, I was not in that position. And over the past 12, 18 months, I've been starting to get some broker deals. And this one ended up coming from a broker that we bought a very difficult deal from. We performed on it. We did what we say we were going to do. And then they started bringing us some other stuff.
Wow. So it is relationships. So this particular deal, was this brought to you by a broker?
This one was. Yep.
Okay. And so where was the deal?
Just outside of Charleston, South Carolina, coastal South Carolina area,
okay.
Low country.
Yep. Yep.
It was actually a development deal. So I have a joint venture partner who actually lives not far from you. He's in Alpharetta, Georgia.
Oh, yeah.
And he oversees a lot of the operations for what we do down in Charleston and South Carolina and Georgia. And so he had this relationship with this broker from a deal that we bought, and he has a background in building and new construction as well. So I don't have a background in building and new construction, but I can still get involved in a new construction deal because I can come in, I can sponsor the loan, I can raise and bring the money, I can do a lot of the asset management or capital management side of things, and then I can let him focus on what he's really good at, which is project management, construction, and the property management operations side.
Right.
So this deal comes across our desk. It's 60 units that we can build on, I don't even know what it is, about 10 acres of land, let's say. And it's in a growing area, right? We buy a lot of stuff and build a lot of stuff in workforce, A and B class workforce areas. I don't do anything luxury. I think that stuff gets hit pretty hard when the market shifts. And we were talking offline that I don't do anything like C or D class areas just because it's a headache from a management perspective.
Right.
So,
right.
This deal came across our desk, and it was in a great, growing area, right down from some hospitals and some schools and higher education schools, and just booming, bustling type area. And so we decide we're going to buy it and build 60 apartments. And the numbers were good. The numbers were we're going to be all in for around, I want to say it was like $6.5 million is our all in cost on this.
Okay.
So it's just shy of $100,000 a unit, or just over,
Yep.
I'm sorry, $100,000 a unit. And that's for land, soft costs, and the actual physical building costs. We can rent these things out for just around $1,200 to $1,300 per month. So good deal. If you look at it from a quick analysis, if you're in for $100,000 a unit, and it meets that 1% rule that a lot of us know from getting involved in real estate and the whole rental side of things, and
Yep.
actually exceeds that. It's actually 1.3%. So the deal would have been worth about $9.5 to $10 million when we were all said and done. And it's new construction in a booming area, and awesome, right? And so it's a good, solid base hit, right down the middle of the plate kind of a deal. So here's what happens. We buy the land. We're going through the whole permitting process and the making sure we get the density and all these different things. And the local hospital that's a block away comes to us and says, hey, we have a desperate need for housing in this area for our traveling nurses and our traveling doctors. Can we come in and rent 40 of the units from you for $2,500 a month, guaranteed every month, regardless of occupancy? We will pay you $2,500 per unit for 40 of the units.
Come on.
And we'll sign a 3-year contract. Okay. So we're like, and they gave us $100,000 deposit.
Holy cow.
That's how serious it was. So we go through the process, get everything approved and zoned and permits, and we're working on our construction financing. We line all that stuff up. And we had, on the $6.5 million, just to share kind of how it's structured, we go and get financing for about 80% of the cost. And then we go and raise private money, syndicate for the other 20% of the all-in. So $6.5 million. We were all in for $6.5 million. We had to raise about $1.25 million of equity from investors, and then we went and got a loan for whatever the balance is, $5.25 million.
Yep.
So it's assumed in commercial real estate that you're going to raise private money for the down payment. They don't need you to bring the actual cash like in residential real estate.
Right.
As counterintuitive as it is, it's actually easier to do big deals than it is to do small deals. They look more heavily at the project than they do the borrower. They're still, you need the net worth, liquidity, and the background of doing that, but it's 90% based on the property itself and only 10% based on the borrower, which is, completely flip side of the coin of residential. So we were able to go in there. We build this thing out. We're wrapping up construction over the next about 60 days or so. And about a month ago, the hospital comes back to us and says, hey, we need all 60 units. Will you lease all 60 of them to us for $2,500?
Come on.
And about a week ago, the city comes to us and says, hey, you guys got enough land? Like, we'll grant you another 12 units. Like, there's a desperate need for housing in this area. So now it's turning into a 72-unit deal. It looks like it's going to – I just got this phone call last week, and I think we can get the hospital to take all 72 units at $2,500. So let me go over the numbers.
Yeah, I want to see these numbers. How does this cash flow look? It's going to be insane. I already know.
Bought the land for $660,000. Our capital improvements were $4.3 million, and our carrying costs were just over $1.7 million. So we're actually all in for $6,740,000 is our all-in cost. So a little more than what I said before. The net operating income on this thing would have been respectable, right? It would have covered debt service, and we would have had whatever it was, it would have been about $15,000 a month in cash flow after all operating expenses, after all debt service.
Right.
Here's the thing, man. The taxes don't change, right? The insurance doesn't change. The utilities don't really change. Now we're going to pay a couple of extra utilities, but it's an extra $100 per unit. They're paying us an extra $1,200 to $1,300 per unit. You know, we have a one-time cost to buy some furnishings and furnish the apartments. That's why some of the numbers change just a little bit. But the reality is that extra 60 units times $1,200 per unit per month of additional cash flow goes straight to the bottom line.
Right. Yeah.
It's straight to the bottom line. It's pure profit for us. And so there's, again, a little bit of additional expenses, but not as much as you think. So our net operating income on this property is $1,463,000 a year. So here's what our model is. Our model is to buy an apartment, fix it all up, put good management, good tenants in place, and then refinance it. So similar to, I got to be all in if I'm flipping a house for 65% of that after repair value.
Yep.
I did the exact same model. I need to be all in for 65% of the stabilized value. So I know that a building that's worth $10 million, if I'm all in for $6.5 million, I can go get a 70% loan. And on that 70% loan, I can pay back the short-term construction financing. I can pay back my equity investors. And then there might even be some refinance proceeds, like a little bit of spread there. And then it cash flows, right? And there's equity, another $3 million of equity built into the deal. Yep. And that's what the numbers would have played out and shaked out like on this. So on this one, because we were able to get the higher valuation, we can go back to the bank after showing just 3 months of occupancy and these leases and payments once it's all built. And so probably this summer, this will come out, and we're going to show $1.46 million of NOI. That puts our cap rate at our basis of $6.7 million. That gives us a 22.7% cap rate on new construction.
That's insane.
Property.
It's unheard of, right? It's unheard of. That's crazy.
Yeah. If we get the valuation, which we are very confident we will, it'll probably appraise. I think it's like a 6.5% cap rate type of market. Yeah, right. Might be even stronger than that because it's new construction, it's booming and all this stuff, but it's a little bit outside of Charleston. So because it's not kind of like a city center, we might get a little bit lesser of a valuation, but it still puts our stabilized value at $22.5 million. That means we've created $15,770,000 of equity in this property. So what our goal is, they're not going to give us a 70% loan because we'd be taking way too much money off the table, and no bank would do that. Right. But we'll probably get about a 50% loan on it. So if it appraises for $22 million, we'll take out $11 million.
Yep.
That's a little over $4 million of non-taxable refi proceeds off the table.
Right. You're just borrowing your own equity.
Yeah, but it's not me repaying it; it's the tenants repaying it, right? Right. And I can borrow it at 4.5. I mean, we're getting loans for 4.1, 3.8. I got one closing in next month. Just insane. So I know we'll make it better than a 4% return. So why don't I take that money off the table? My tenants are repaying it. I can utilize that money and roll it into other deals, roll it into other projects, just stay liquid if I wanted to, have some peace of mind. So we're going to take a 50% loan on it, pull about $11 million off the table, and then we have put an $11 million loan, take a little over $4 million off the table in refi proceeds. After all expenses, after all operating expenses and debt service on the $11 million mortgage, it'll still cash flow $778,000 per year. So
that's ridiculous, man. Dude, that's insane. Just crazy.
So not only do I take $4 million off the table, and it's not all mine, I have 2 other partners plus my equity investors. So I own, I think, 25.5% of this deal. Okay. But I'll take $1 million off the table tax-free in right around a 12-month, maybe 15-month time frame. And then I get 25% of the cash flow. So if it's cash flowing just shy of $800,000 a year, $195,000 a year cash flow to me. It just gave myself a raise of $200,000 a year and took $1 million off the table. So, and my partner made $1 million. His brother, who's also a partner, made another $1 million, gets that cash flow as well. And our equity investors get all their money off the table and have a chunk of that cash flow as well. So it's a sweet deal for everybody involved. It's one of those deals though that, you might say, oh dude, you got lucky, right? You got lucky because the bank came and gave you guys a good loan. You got lucky because this broker brought you this deal off market. You got lucky because the hospital came by and asked to rent all these units. Maybe, but what is luck, right? Luck is when preparation meets opportunity equals success, right? And all of a sudden people think you're lucky. And the reality is, man, I go back to, I think about what Jim Rohn said. Jim Rohn is like the OG of personal development, right? He was Tony Robbins' mentor. And Jim Rohn has this analogy of sowing and reaping and planting and harvesting. And he says something along the lines of like, listen, you have to go out and you have to plant seeds. If you don't plant seeds, you will not have a harvest, right? Now, some people go out and they plant seeds and some of those seeds dry up and they get burned out by the sun. They don't get the water that they needed. They blow away into somebody else's pasture and they don't grow actually for you. And you gotta work an entire season, right? At like half of the year before these things actually grow and produce fruit or produce vegetables. And there's a lot of people who get discouraged when the seeds burn out, when the seeds blow away, when the seeds don't get enough water, don't get enough soil, or when they take root, but they're not, you can't see the actual fruits of your labor, right? You can't see the actual fruit growing because sometimes it has to grow down before it grows up. And I see a lot of people who are like, they're out there and they're like, oh yeah, I'm planting seeds, but then they get discouraged and they stop doing it, right? And what I can promise you is that some of these seeds might not harvest, right? You might not actually be able to get a harvest from some of them. Other ones might harvest, you might see them sprout in 5 days. You might see them sprout in 5 weeks, 5 months, 5 years, maybe 50 years. That doesn't mean they're not working underneath the surface, right? Just because you're not seeing the results right now doesn't mean it's not working underneath the surface. It doesn't mean that like when you're out working out every day and you haven't worked out for 2 years and all of a sudden you work out every day for 30 days, you don't see any results. Does that mean you're not actually losing weight? No, your body has to get back in that priming of the pump and get the muscles working. And you're like, oh man, how am I not seeing results? You got to work out every day for 4 months, 5 months before anybody else even realizes and they see the results of your effort. You're like, dude, I've been bleeding, crying and sweating and achy muscles for the past 5 months. And you're just now seeing that I'm losing weight and looking more trim. That's what real estate is too, right? You got to go out, you got to plant the seeds, you got to put in the effort. And over time, if you're doing deals and if you keep on planting seeds, eventually there will be a harvest.
For sure.
I promise you that if you don't plant seeds, there will never be a harvest. So you just got to go out there, keep planting seeds, and eventually a deal like this will fall in your lap. I've been waiting 15 years for this deal to occur, right? But
Right.
Because I was bad at real estate, because I stuck with it, because I didn't quit and go somewhere else and start over and go through the learning curves over and over again in different industries, you just stick with it. Real estate's not an experiment.
Right.
Since the beginning of civilization, wealth has been measured in land ownership. And so that it works. It's just a matter of time. And how long will it take before your seeds start sprouting?
Well, it's a common thread with all of these best deal evers. Because they are the unicorns, but you don't get a unicorn until, like you said, you're planting a ton of seeds. And part of that's just being in the business, doing deals. And I feel like every year I have a quasi unicorn because you do enough deals like, oh man, this is a phenomenal deal this year. Mm-hmm. But I wouldn't have gotten that deal if I wasn't getting all the base hits and the singles and the doubles and then eventually get a home run.
And the reality is, man, base hits win the games, right? You don't want to rely on the home runs. The home runs are nice and it's happy and it's exciting when you got the momentum built up. And again, it goes back to like that whole momentum thing and plant the seeds. You plant enough seeds, eventually they're just sprouting all over the place. You can't even keep up with all of them. Now you can cherry pick the best deals over and over and over again. And so that's kind of like where my business is headed. I've been waiting 11 years for this deal or 15 years for this deal. Now all of a sudden, dude, I just contracted some land down the road from this for $2.9 million. We had some closing costs. I'm all in for $3.1 million. I just bought the land. Got 3 offers on the table right now. One's a cash offer for $7.4 million. No contingencies. Close in 60 days.
For the land?
For the land alone.
Good Lord.
We approved it, right? Meaning we got it rezoned and changed from industrial over to apartments and got some free grant money and some other. So there's definitely value that we created there. But for the land alone, we have an offer on the table that would net us $4 million in less than 60 days of ownership. We have another offer on the table that's about 90 to 120 days. They need to sell a property in order to be able to buy this, but they're willing to pay for $8.2 million. So there's a contingency. Then a home builder comes in, makes us an offer to give us essentially $3.5 million right now and $2 million every 90 days for the next 2 years. It's a $16 million offer. So, or we can build this thing out and build 550 units ourselves and be all in around 55 million bucks is what we would be all in for. And it would appraise for upwards of 90 to $95 million. We'd take some money off the table, let this thing cash flow, and who knows, and you got A-class property. So it's one of those things where, again, dude, you just keep on planting seeds, and eventually there's so many seeds that you can just cherry pick the best ones, right?
That's right.
And when you have a lot of options, I think that helps lead to success. It's kind of like golf, right? If you're stuck with just my ball in golf, you're in bad shape, right? But if we're in a scramble, you got your ball, my ball, and 2 other people who are really good golfers. We have different options to choose from. We can pick the best ball, and sometimes quantity leads to quality. Sure. And you just keep on planting seeds, man. Just keep on doing it. Stick with it. Know that it's going to grow eventually.
Tim, that's a heck of a takeaway. And what a deal, man. That might be the unicorn of all unicorns you shared with us today. That's phenomenal, man. Congratulations for finding that and all the doors that's even opening up for you outside of Charleston. Very cool, man. Thanks so much for coming on today. It was fantastic.
Appreciate you, man. Appreciate all the value you bring, Ken. So you're a rock star, buddy. I appreciate your friendship too.
Yeah, you as well. Take care, buddy. Thanks for listening to the Best Deal Ever show, brought to you by BiggerPockets. If you've been energized, entertained, or enlightened by today's show, please feel free to hit the subscribe button. You can also follow me on Instagram and Twitter at Ken Corsini, or check us out online at redbarnhomes.com. And don't forget, one man's best deal ever may be the inspiration you need to create your next best deal. So, hope to see you on the next episode.